Hello and welcome. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint, and today I'm going to talk to you about what led to the collapse of Silicon Valley Bank in the US and how the US government has stepped in to save its depositors. First, what was Silicon Valley Bank, or SVB as we call it? SVB made its name as being the banker to the tech startups and venture capitalists in that sphere. The bank did not only lend to them, but also it held a lot of their deposits. As such, it was an integral part of the startup ecosystem in the US. So, what chain of events led to the US president, the Treasury Secretary, and the chairman of the board of the US Federal Reserve, which is their central bank, to all get involved in trying to help the depositors of a bank that, until less than a week ago, was actually quite healthy? In other words, what led to the second largest banking collapse in US history and the largest since the global financial crisis of 2007 2008? The story starts last Wednesday, or 8 March, when SVB announced that it was raising $2.25 billion from a share sale, and that it had also sold $21 billion worth of securities from its existing portfolio. The bank said it had needed to do this to raise cash due to its falling deposits. Now, why had these deposits been falling? There are two reasons to this. The first is that startups in the US had been withdrawing their savings to fund themselves through the so-called funding winter, which is when funding for startups had been drying up. The other issue was that SVB had been investing a large amount of the deposits that it did have in bonds at a time when the interest rates in the US had been low. However, over the last year or so, in response to the pandemic and inflation due to the pandemic, the US Fed has hiked interest rates by a whopping 450 basis points. So this greatly hit the value of the bonds that SVB held because it bought them when interest rates were low. What this meant was that when SVB wanted to sell them, these bonds, to raise capital, it had to sell them at a loss. What followed was a decimation in two parts. One part was that the share price of the parent company of SVB, called SVB Financial Group, fell 60% on Thursday, which is the day after SVB said that it would make this share sale. On Friday, trading was halted on the stock as its price fell again in the pre-market trading. Now, the second element of this decimation was the bank run itself. A bank run happens when all or most of the depositors of a bank show up on the same day or at the same time to withdraw their deposits. Banks usually rely on the fact that this will never really happen. So they keep a buffer, but it's nowhere enough to repay every single depositor who shows up. According to SVB, a total of $42 billion in deposits were withdrawn from the bank on Thursday itself. So what did the government and the regulators do in reaction to this? They were quick to respond. The Federal Deposit Insurance Corporation on Friday announced that SVB had been shut down and that the Deposit Insurance National Bank of Santa Clara had been set up to ensure that all insured depositors would get access to their insured deposits. According to the rules in the US, deposit insurance is up to $250,000. Which means that deposits up to this amount were guaranteed to be replaced by the government. However, in this case, this limit actually doesn't really matter because on Sunday, the US government and the regulators issued a statement saying that all depositors would have access to all of their deposits, not just the insured ones. US President Joe Biden reiterated this in a statement on Monday. Now, while SVB has reportedly invested in some Indian startups, the quantum of these investments are yet unclear, which makes it difficult to judge how large or small the impact will be here. But it's clear that the ongoing funding winter will likely continue, and it looks like there are tough times for startups ahead. That's all from me. Thank you so much for watching.